Hello and welcome to Virtual Investor Conferences. My name is Eric May, and on behalf of OTC Markets, as well as our co-hosts Murdoch Capital Partners and TA Advisory, we're very pleased you have joined us for today's uranium and vanadium company presentations. Our next live presentation is from Fission Uranium Corp. Before we introduce our speaker, a few points to note. Please submit your questions in the question box left of the slides. If you're interested in scheduling a meeting with Fission Uranium, please click on the Meetings tab found on the left navigation bar. You'll be able to view the company's availability and submit a meeting request. On a final note, all of today's presentations will be recorded and available for 24/7 replay. At this point, I am very pleased to welcome Ross McElroy, CEO, President, and Director of Fission Uranium Corp, which trades on OTCQX Best Market under the symbol FCUUF, and also on the TSX under the symbol FCU. Welcome, Ross.
Thank you very much, and it's a pleasure today to be able to update everybody on Fission Uranium and our PLS project, which hosts the RRR deposit. I think the title says it all, is developing an elite Tier 1 uranium ore body in the Saskatchewan's Athabasca Basin. So why do we think that PLS is the right project and the right time for development? I think there's a number of key factors here to, that I think strengthen this thesis. We are in a greatly strengthened uranium sector and have been for at least the last 3 years now. We're seeing much higher improved uranium prices than we did back in, say, 2019 or even the early 2020s. But we think we're just at the beginning of a long bull run. It really is driven by the nuclear renaissance. Understanding that nuclear is such a key part of the electrification path forward. Green energy, clean green energy, nuclear is an important key in that aspect. We operate in a world-class district jurisdiction. Saskatchewan consistently ranked in the top tier of mining investment jurisdictions in the world. Most surveys consider Saskatchewan to be in the number 1, 2, or 3 position globally, and this is year after year. It is truly, one of the top mining investment jurisdictions out there, and certainly in the world of uranium, it would be considered number 1. We have a very strong team. We've been developing as we've advanced the project, we've also evolved and grown our expertise within the group. So the team is now consisted of mine engineers that know how to move projects forward, permitting expertise, and also expertise in the world of community relations, because it's key to have all parts of that those aspects going forward in order to get a successful development story underway, ultimately to be a producing asset. We have a very large indicated resource. We did a resource estimate back in September 2022 that substantially increased our indicated classification, which allowed us to be able to bring more of the resource into the mine plan. We've completed a feasibility study on this very large resource, and you'll see a number of key points to this, but I think maybe some of the highlights I want you to continue to remember is this promises to be a very low cash cost operator, in the elite category, some of the lowest in the world, and you also have a very high grade deposit that is part of the jurisdiction that we like to see ourselves in. I think gives us a real advantage over just about every other project out there right now. There is a clear development path, and this has a lot to do with being in a favorable jurisdiction. The path forward through feasibility is very straightforward. And with the team we have in place, we're very confident that we can continue to move this project through the advanced stages of development, ultimately to be a producing operator in northern Saskatchewan. We have a timing advantage, as it's one of the very few projects out there that is at this level of development stage. That we should be able to see production in this cycle of the uranium market. and we'll just move on to the next slide. So I just want to spend a couple of minutes talking on the macro scene. The uranium story so far. You're looking at a chart here over the last 25 years, and just a number of the key points inflection points in the price curve. Like I would say, we saw in the early 2000s, about 2007, the price of uranium go up to about $143 a pound. It was a peak that was reached very quickly. You can see off the chart, but also fell relatively quickly. But it was a continued strengthening uranium market until 2011 with the Fukushima event. Then we saw almost a decade of rather slow and in the doldrums of the uranium market. But 3 years ago, I think really changed everything. You notice the price of the commodity starting to move up, continued to move up. And I think that we're well on the way to a path where we see continued uranium prices. We are indeed in a nuclear renaissance right now, which is really powered by the electrification of everything globally. Looking at electric vehicles, I mean, just everything we do is now plugged in, requires electricity. So I think when you couple that with the realization that the only path to a clean zero carbon manner in generating electricity, we have to transition ourselves away from fossil fuels and produce that electricity in a clean manner, and really that's what nuclear provides the equation here. The supply deficit, the uranium market is in a long-term prolonged state of supply deficit, and really the only way out of it is for the price of uranium to increase substantially. What we're seeing is the global incentive price for new production estimated to be roughly $90 and higher in order to get new development in for production. And really, from where we're at right now in the price of uranium, that's a double in the price of commodity. So we think we've got an awful long way to go, in the overall sector. Looking at just closer to home, the province of Saskatchewan, generally considered a premier high-grade uranium district. Saskatchewan is an important supplier of uranium to the world. What's unique about deposits in the Athabasca Basin is that the grade is typically 10 to 20 times higher than your average grade of a uranium deposit worldwide. So the grade of ore is probably the most important single factor in the economics of a deposit. So having grade that's orders of magnitude higher than elsewhere really does give us a leg up. And then having a top rated jurisdiction on top of that, you really can't beat the province. And it is, as I say, an important supplier for the global uranium market. Taking a closer look at the Athabasca Basin, here's a map showing the basin itself. So we're looking in the northern province of Saskatchewan, sitting right in the middle of Canada. The basin takes up the entire northern third of the province of Saskatchewan, and it's very close to the oil sands operations in Alberta. We're probably about 80 kilometers to the east of Fort McMurray, which is the center of the oil sands operations. But specifically, I say looking at the Athabasca Basin, the last 50 years has really been focused on development on the eastern side of the basin, but that is substantially changing now. We made our discovery at PLS 10 years ago, the Triple R deposit. There's been a number of other significant discoveries nearby, and I think that what that tells us is that the evolution is going to move from focused on the eastern side of the basin. The next generations of mines to be developed will be on the western side of the Athabasca Basin, and Fission's PLS project is right in the heart of that activity. The first major discovery in this region, and I think just a key part of the whole story, development story going forward in the Athabasca Basin. Just where do we sit here? This is a cross section of the Athabasca Basin showing where a number of the high-grade deposits occur. the early part of exploration and development in the Athabasca were the unconformity deposits right at the base of the sandstone, which is that yellowish color rock unit that you see here, right at the interface between there and the hard crystalline basement below. What's a better situation, though, is to have your deposits strictly in the basement rock in the gray area, because that is crystalline, hard basement rock that really doesn't have the water issues that you often see at the unconformity. So in other words, you have much more competent rock, less water flow activity. The end result is you end up with a lot lower technical risk in mine development. And we're blessed, of course, with having one of the closest deposits to surface. So near surface, high grade, basement hosted. This really is what the PLS Triple R deposit is all about. We completed a feasibility study earlier this year, so about 3 weeks ago, and we announced some of the key economic characteristics of the feasibility study. We're looking at a mine life of 10 years, construction period 3 years for development, and averaging just over 9 million pounds of uranium a year. So a significant contributor to the global supply of uranium. And as I mentioned, low operating costs. We're estimating our operating costs to be $13 Canadian a pound. That is under $10 a pound US, and that puts us in an absolute elite category for being one of the lowest cash cost operators worldwide. Looking very healthy overall economics with an NPV at 8% discount after tax of $1.2 billion Canadian, and an IRR after tax of 27.2%. But you'll notice in the diagram here, we're looking at development as a strictly underground operation, so with an access by decline to access the 3 zones that are currently in the mine plan, the R840, the R00, and the R780 zones. Just another map showing essentially the same thing, giving you a slightly better perspective of where the ore body sits. You can see it very close to surface, and you can see the underground working design, which will connect the 3 zones in the middle. Where there is some great growth potential on the deposit itself, there's still 2 zones that are on flanking both to the west and the east of the ones that are in the mine plan. They can be part of the resource, we believe, with for the mine plan. They're currently at inferred categorization, so just really it's a function of putting more drill holes into them, and we'll be able to expand the mine plan significantly. So we're looking right now globally around 130 million pounds, 115 million pounds in the high classification indicated category, and around 15 million pounds at inferred at a grade of just under 2% U3O8. So what did we see out of the feasibility study? Again, emphasizing very low operating costs, $13 a pound Canadian U3O8, short construction time of around three years, strictly an underground mining scenario, which gives us a very small environmental surface footprint and very strong overall economic numbers. If you look at where our project sits compared to others in the basin, other development projects, you'll notice that really the 3 key projects out there, ours, Next Gen Zero Deposit, Denison's Wheeler River, we're all looking at very low operating costs, substantially lower it appears to be than the current operating mines, which are more of your unconformity type deposits. So Triple R and the Arrow are basement hosted, and I think that is a great deal of why we can achieve lower operating costs. As I mentioned, better rock to be mining in, and also lower technical risk. We still think there's a great deal of value of our deposit compared to the other premier development projects out there. Currently, our enterprise value is about half of what Next Gen Denison have. I will say that we do continue to close that gap. About 2 years ago, it was a 3-to-1 ratio. Now it's a 2-to-1. We think as we continue to move our project forward, we're going to continue to close that gap. And so do consider that the Fission PLS project to be a value play. Timelines to development. In 2023, we're entering into sort of the last phases of the environmental assessment phase, where we have completed feasibility study, of course, been ramping up our permitting and regulatory work. And key is getting a great deal of support at the local level with our Indigenous rights holders and stakeholders in the region. In fact, we've signed funding and communication support agreements with all 6 key Indigenous groups in our area. So we have a great deal of support for this project, and that is going to be key as we continue to move forward through the permitting and regulatory process. Going forward, having that support at the local level is key, and it's something that we spend a lot of time at and will continue to do so. We will enter into our environmental impact assessment phase in the latter part of 2023. And as I mentioned, about 3 years to construction. So that looks like construction would start in 2026, being in production by 2029, perhaps a year earlier, 2028, but that's really roughly the timelines from where we're at right now to be a producing asset. There's a great deal of blue sky yet on the property. We have a very large land package with over 31,000 hectares. Just for context, in comparison size, that's 5 times the size of the island of Manhattan. But I think what's key here is that really we were successful early on when we started to explore the PLS project. And you'll see where we've marked with a circle the Triple R deposit. That's where the majority of exploration and development work has been over the last 10 years. I would say that we've really systematically explored maybe 5% of the property. So we have a great number of high priority, excellent targets throughout the property. And I think as the uranium market continues to look good and healthy, it's going to support further exploration. So look for Fission to begin doing some exploration, possibly as early as this year. Certainly by 2024 and 25, we're going to continue to ramp up our exploration efforts at the same time as keeping our focus on the Triple R deposit and advancing it through the regulatory regime, moving it forward into being a producing asset. We also staked additional ground. So a little further up near the Clough Lake, the old Clough Lake Pass producer, about 80 kilometers to the north of PLS, we've staked a large, impressive land package that would be targeting similar type of mineralization to what the Clough Lake deposit was all about. And it was a 62 million pound producer that was mined out in the 2000s. So we have a great deal of blue sky potential, not only on the PLS project, but on neighboring properties as well. Just a little bit on the corporate information. Currently trading around 83 or 84 cents today. That gives us a market capitalization of just under $600 million. We're got a healthy treasury right now with around $42 million in the treasury. And we're covered by a number of researchers globally, including researchers in Canada, in the US, over in London. And you'll notice that our shareholder registry is a fairly even balance between institutional ownership and retail. And we have a strategic partnership too with China General Nuclear, one of the 2 Chinese state-owned utilities. They currently have a 13.7% equity stake in the company, and also have an offtake agreement with us for up to 20% of our annual production, of which they would be paying market price for. So essentially spot price for 20% of our production. So I think we're sitting in a very good shape right now, and backed by very seasoned management group, strong board of directors, and I think we've got the team and the asset that can move this world-class project forward, and looking forward to seeing our continual development milestones over the next several years, ultimately being a producing asset, as I mentioned, towards the end of this 2028-29. So thank you very much. And I think at this point we will take some questions, and hopefully we'll be able to answer them. So the first question I see, what are the factors underpinning the projected low operating costs? So the first factor, I would say high grade. High grade will always be an important contributor. You need size as well, and we have that. We've got a very large ore body. Our PLS, or the Triple R deposit, the 5th largest ore body discovered in the Athabasca Basin. So that does give you some context. It's in the the higher end of size of deposits. So you've got grade, you have size. We're in basement rock, which is low risk, technical risk for mine development, and the fact that we're near surface. I think all of those points together give us the ability to be projected as a low operating cost. Next question. What surprised you, if anything, about the feasibility study? I think I'll say if there were surprises, they were certainly on the positive side, on the pleasant side. In a feasibility study, you're not really looking for surprises. You're looking for confirmation of what you've already done, that you've already assessed through the pre-feasibility prior to it. I mean, the feasibility study is a lot more detailed study. You're getting a better cost estimate, better projection, and yet we were able to achieve a much higher mine life. So we increased mine life by almost 50%. We increased our NPV value by some 70%, and we were also able to use higher uranium prices. And I think maybe one of the pleasant surprises was that the capex was the initial capex was actually marginally less than what we saw in 2019, and I think that's really quite remarkable given the high inflationary environment that we're in. So confirmation of everything that we knew before, but pleasantly surprised in all categories on every aspect of the feasibility study. The next question I have are, what are your key milestones for 2023? So we're entering into on the permitting and regulatory side, we'll be entering into the environmental impact assessment phase, which is roughly a 24 to 36 month period where the project is sitting in the hands of the provincial and overseen by the CNSC, the federal regulatory group as well. They'll be looking at this, every aspect of our project, how it's going to be mined, all the strength of the baseline environmental work, the support that we have from our local Indigenous partners in the area. All of these things matter a great deal, and so we'll be continuing to report on these key milestones for 2023. But and I guess at this stage too, we have a program underway, and it's really all about the advanced engineering, design, and moving through the regulatory aspects. But I think look to us too for stories on the exploration front as well. As I mentioned, we might be ramping up exploration mid to latter point of 2023. I have another question here. If we can explain the capex, why it remained relatively the same as it did in the pre-feasibility study. So that's a great question. So we are in an environment of inflationary costs. So I think the street consensus was that we're likely to see capex being 30 to 40% higher. That wouldn't have been a stretch, and yet we were able to come in marginally lower than what we had in 2013. So I think that speaks a lot to some of the redesign that we had, mostly on the infrastructure side of the equation. And I'll just cite one example. the pre-feasibility study, we had envisioned rerouting Highway 955 that runs up through the project area. We were going to reroute it around the project area, around the tailings management facility. We realized that that wasn't actually necessary. In fact, what it'll be, we'll keep the highway as it is, where it is. Local traffic can be uninterrupted moving north and south along it, but rather we'll use traffic control situations, stop signs, lights, in order for mine traffic to be able to cross a highway to access the other parts of the property. So I think that, you know, is a great cost savings when not having to reroute the highway, but just put signs and lights in place. So that's one part. We've also moved costs further into production. Also, like for example, mine equipment. In the pre-feasibility study, we had looked at buying all of our mine equipment up front. So that was initial capital outlay. We're now, of course, considering a much better scenario, and that would be to lease equipment, moving those costs further into the production. So we do have a decrease in the initial capex, an increase in the the operating costs overall due to, you know, some of these aspects, but I think in the inflationary environment, you know, I think this was an absolute win for us. Let me move down. Can I speak to the PLS, the infrastructure at PLS? I think what we're blessed with right now is having the highway in place. So we have road access right up to the deposit area. There's Highway 955 that was put in by in order to access the old Clough Lake, the historic Clough Lake mine, 80 kilometers to the north. That road is considered a highway by the province. It's maintained. It's open 365 days a year. It'll probably require a little bit of upgrading there to be able to support this generation of mine equipment and traffic going, but that's a minor upgrade rather than having to put in the road. But otherwise, you know, because this is a relatively new area, there is going to have to be some infrastructure put into place. Consider that there is no mill in the area. On the eastern side of the basin, there are operating mills at Key Lake and Rabbit Lake, at McLean Lake. Whereas on the western side, that's something that we have to build. So there's a cost to that. Whether we can, our project has shown that we'll be developing that as our own, but there is certainly opportunities to have a central mill in the area and shared with a number of the projects that are looking that they can be, operational uranium mines as well. So there will be need to build a mill and also electricity too. Well, right now we're looking at having to generate our own power. The provincial power grid does not extend to our project area. I think there's merit for the province to extend electricity there. We'll be obviously lobbying the government to put in provincial power, but if they don't, or if we can't get it in time, our project right now envisions generating our own electricity. Another question here, what will it take to increase mine life? I think, that's really, I think in the immediate sense, we know that there's two other zones out there with substantial inferred resources. We can convert them to indicated and be into the mine, into the mine plan by getting them up to an indicated classification. That's just a function of adding more drill holes. We've had a great track record to date so far at conversion of inferred resources to indicated. You know, we saw that in the R840 West zone in the pre-feasibility time. It was considered an inferred resource. We put 25 holes into that, converted it over almost on a pound per pound basis to indicated and into the mine plan. The same can be said on the 1580 and the 1620 zones that flank the deposit on either side. So great deal of room for further growth, which equates into longer mine life. And I think that we're kind of running out of time. So with that, I will wrap up this presentation for now, but I do encourage people to visit our website, contact us through the the email that you'll see on the website, and there's phone numbers, email. So get in touch with us. We're happy to provide further updates, and thank you very much for your time for